Hey guys, it's another Stock Talk. Today is April 17th at 4:21 p.m. Eastern Time. So there's a lot of things that happened in the markets today, and but before we get started, thank you everyone who's joining this channel. If you're new, if you're coming back for another Stock Talk, thank you so much. And I'm going to tell you guys some things that I've learned today, some things that I've learned in the past couple of weeks that I kind of noticed today, and these are lessons learned. I took some losses, and I'll tell you why I took those losses and what we can do differently in the future so that it will improve our trading process. So let's get started on SPY on the 180-day chart. So obviously, we are in an uptrend, and Dow Jones went up 213 points today. But take a look at TQQQ, which is one of the ETFs that I really like because it's actually really popular in terms of volume as well. And it's 3 times leverage, okay? So NASDAQ. So let's take a look at TQQQ. Dow Jones went up a little over 200 points, but TQQQ ProShares went up over 6% today, right? That is incredible. And looking at SPY, right? It went over 1% today. And now take a look at what happened. We can say that we're a little overextended over the 20 EMA. And at this point, we have to be very cautious. Everyone is euphoric. Everyone is excited because the markets are going up finally. But we have to use technical analysis and our best judgment to make sure that we don't get caught in a trap if you guys are making money when it does come down. So here's SPY on the 180-day chart. I zoomed in on the bearish portion where we're seeing a lower high, okay? So taking a look at this, we are slightly overextended, and one thing to keep notice, did the 200 SMA, as we talked about in the past few days, act as a resistance? No, it actually went over that during pre-market hours. It was actually after market yesterday to pre-market today. SPY just climbed over 200 SMA like it was nothing. So let's take a look at why we identify 200 SMA as a potential resistance first. So yesterday, look at this area right here. It was a resistance area. Resistance area at the 200 SMA, which is the red line. Resistance area right here. But it didn't do that today. It cut through like it was butter. So now we have to look at specific trends that happened in the past in which it cut through like butter. Okay, let's take a look at this. Here we had a surge above the 200 SMA, similar to today. And look what happened the few days after. A downturn. Okay, look at right here, guys. Massive surge above the 200 SMA. Next day went up. And then what happened? We did a double peak and it started coming down. So what's the lesson that we have to learn? We have to be very cautious in this euphoric, where everyone's excited environment when we're nearing the resistance. And this resistance could very well be tested. This is the long-term bearish resistance at around 273.66. If we get close to this area tomorrow and we kind of test it, we have to see some kind of test and some sort of consolidation. Now, remember, you guys, in the past few days, we were seeing this consolidation at this resistance line on SPY, which was 266.90. Do you guys remember that? Maybe it's already a couple days ago, but that was a resistance. How did we get over it? We got over it after a couple days of consolidation near the resistance. Okay, what are we looking for here when we get to this? This is even a bigger test for SPY in the markets. We have to see a couple of days of testing the resistance area. Now, if we can test it, one thing to keep in mind is one possibility, we'll do a double top, and then once it does a double top, be very cautious because at that point, the market could go into a potential reversal, okay? Another thing that could happen is we see consolidation near the resistance, and then it will slowly push up because you can see that the resistance line is actually slanted downwards. So it wouldn't be too difficult if SPY was consolidating going just from horizontally left to right, that it'll eventually get over the resistance line. So those two scenarios, we got to keep track in the next few days. Now, what is my trading strategy? If you guys are in SPY, if you guys are in ETFs that correlate with the markets or stocks that correlate with the markets, what's this trading strategy? Well, in my opinion, you guys are making money right now because SPY has gone up. So it is time to think about taking profits little by little. You don't have to get exit out immediately, but as we get closer to the resistance, take your profit little by little, and then you can take all of it out as we get to the resistance. So why is that? So once again, I want to ask you, why do you want to test, like if it goes up, you know, you might lose up on 1.5% profit, but so what? Because if it does come down, it comes down quickly, right? And you don't want to be part of that, because then you're losing money at that point, right? You're losing your profits at least. So you don't have to take that chance. Once it gets to near this point, you can wait until the market starts a reversal back down, or wait until it starts breaking above that resistance. So that is my trading strategy for right now. So now I want to talk a little bit about intraday today on SPY. So very interesting patterns today. Why is it interesting? Well, because SPY basically bounced from the middle VWAP to the top VWAP, middle VWAP to the top VWAP, right? Shown by these white lines right here. So what does that say? If it starts bouncing from middle to top, that means that we are in a bullish trend, at least intraday. So you can see that at the end of day, we actually saw a little bit of sell-off, okay? Well, sell-off because we are overextended and people don't want to keep their money because potentially tomorrow it might come down, it might keep going up and retesting that major resistance as we talked about. So I want to talk about one thing that I looked at earlier, and I apologize if there's some feedback in the background. It's just people are mowing lawn outside. So we have TVIX, which tracks volatility. So as markets are going up constantly, TVIX is dropping. And TVIX actually dropped almost 12% today. So one thing to keep in mind, there's some really interesting trends right now. TVIX eventually dropped to its support. It's literally like 2-month support area where you know, this is where we started the bullish pattern for volatility. Now, this coincides almost nearly perfectly with SPY, okay? Right, when SPY was going up, it almost reached the resistance today, and today TVIX reached the support today. And at the support, we did see a small bounce. Literally, this line has not changed for the past few weeks. It's been situated at literally $6.75. Today, it fell to $6.72 before it bounced up. So a couple things to keep in mind is, again, this is a territory where we are a little uncertain, so it is a good time to start taking profits. Now, here's the lessons I've learned from TVIX. You guys know that I was in TVIX when it was in like around $9 and something, right? And as it came down, I kept TVIX. So today, I actually released my TVIX position at $7.50. Around there on my Robinhood account. And the reason is I saw it was continually going down, and I didn't want to lose another, like, what, 8% today after I traded it off, because SPY, I mean, this is just an obvious pattern, right? SPY is retesting this resistance, and it's going, I mean, it's surging up. So why do I have to keep TVIX or volatility right now? And I know a lot of you guys actually released your position earlier than I did, so props to you. So here's the lessons that I've learned. We identified TVIX a break of trend at this low, around $8.90, $8.80. At that point, the first lesson I've learned, and I hope you guys learn it in the future, is if it breaks the trend, just stop loss out. Take the loss instead of, you know, losing hundreds like I did. Okay, so that was the first lesson learned. And the second lesson learned is, look when I released it today. I released it pretty much near the support. So I did save myself maybe 8% because I did release it a little early, but there might be potential volatility bounce tomorrow. So what am I looking for TVIX? I'm looking to re-enter TVIX should I see a bounce, okay? Today, we can't call that a bounce. I mean, it just hit the bottom and then it started trending up a little. But if we do, in fact, see a bounce starting tomorrow and the day after, and with TVIX, I want to see a couple of bounces from the bottom. So this is not going to be like a tomorrow I'm going to buy in or the day after tomorrow. I want to see a couple of bounces, consolidation near the bottom, and then potentially on the uptrend, I will buy volatility. So why is that, guys? Why am I waiting for volatility? Because sometimes I don't like to wait. Well, I like to wait because volatility has a good chance because markets are generally going higher, right? Correction happens every 8 years or 10 years, right? It takes a while for a major correction to happen. So volatility tends to go down. So it can more easily break this support than for it to consolidate and start going up. So I need to see a confirmation of the uptrend. What's the confirmation? So this time I'm looking for a confirmation by going over this 20 EMA line. Once it starts progressing over the 20 EMA line significantly, like if it continuously progresses over the 20 EMA line, that's the time to buy into volatility. But so this is maybe a week later. I might look into buying volatility once it consolidates. But for now, volatility is out of the equation for me in terms of buying in. All right. Next thing I want to talk about is Forward SCL, which follows futures. Now look at futures, right? Here's Forward SCL. Yesterday, we identified a higher high and a higher low. And we said that there was a potential for it to come down like the previous pattern. You guys can see this, right? Comes to the bottom, goes to the top, comes to the bottom, goes to the top, and now it's heading on to the bottom. So there was a potential for it to come down. Not necessarily all in one day, but eventually it'll come down. But there was another possibility. What was the other possibility? We identified that this was the previous resistance at 66.16 and that this has become the new support. And we were going to see that if this support would hold. So today, what was that? The support held. Okay, so the support held, and we in fact did kind of bounce off of the support, and now we're back up here. So Forward SCL crude oil went up over 0.5%. I am still in the position called drip. So taking a look at drip, right? Look at this messy pattern. So drip is at its 180-day low at 948 currently. And GUSH went up another 2%. So ask yourself, do you want to be in drip right now? Do you want to be in GUSH right now? Right? I'm more inclined to be being in GUSH than in drip right now. Am I going to go into GUSH? No, I'm not going to go into GUSH because it's still overextended. And in order for me to go into GUSH right now, I do need to see CL, Forward SCL, the futures, to start confirming this as the support again. At least confirming that this is the support, and then we'll see another surge up. And this surge up might even get to $68, over $68. So crude oil, still bullish. Drip, not so much. So I'm looking to cut losses tomorrow for drip. When it starts, if it starts trending under $9.20, that's the time I'm looking to cut losses because why bag hold these ETFs when it's trending down? Like it's kind of obvious. Like if you're an outsider and you're not trading and you gave someone this chart and you're like, would you invest in this ETF right now? And the person doesn't need to know any technical analysis to know that this is going down, and you'd say no, right? So why hold it? There's no reason to hold drip, and just take that loss and move on, right? You guys don't need to average down it on a ETF that's dropping. So, all right, that is a drip. So I want to talk to you about one more thing. So I exited out of TVIX and I entered a position with DGAZ. Now I saw potential DGAZ yesterday with /natural gas. So here's /natural gas. We saw that there was a resistance at 2.757. Okay. And on this day, right, this was, I believe, on Friday, we saw a reversal candle. We saw another reversal candle around yesterday, Monday. So what was I looking for today? Well, remember, natural gas correlates with the ticker UGAZ. So DGAZ is the inverse of natural gas. So when natural gas futures are dropping, DGAZ is moving up. So I'm looking for a DGAZ position, and I entered a position today. So what was I looking at today? Well, yesterday we talked about the support area at $27.18. And that when it surged up, we didn't even get a chance to go in, right? Because it surged up during pre-market, but it came all the way down today early morning. But what was I looking for? Yesterday we said that we were looking for a retest of this support. Did we retest the support today? Well, yes, we did on the first 4-hour candle. It looks, we went down and we came back up. Even though this was a red candle, we did manage to hold above the support. And at that time, I bought into DGAZ at around $27.12 on average. So I bought into DGAZ, and then it went up later today. So this is what I'm looking for. We don't need a confirmation of an uptrend, necessarily speaking, because like I said, if we buy near the bottom, and we have a good reason for doing so, because it bounced off the support twice, it's a double bottom, then you can just buy in. So why don't you necessarily need a confirmation of the uptrend? Because number one, if you buy in around down here and it starts going up, you can set your stop loss a little lower. Your stop loss is tighter, right? So you won't lose as much money. Let's say you buy in on the uptrend, okay? It crosses the 20 EMA tomorrow, and you buy in at $28.14. When exactly are you going to sell? Are you going to sell here, 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 here? Where's your stop loss? Down here? Like, down here? Like, it's harder to pinpoint your stop loss at that point. So my strategy, what I like to do, I mean, you don't have to do that, right? It doesn't work for everyone. But my strategy is if I buy near the low, I can set my stop loss tighter. So as it goes up, my potential for profit is greater because I say, okay, we have identified a good trend and we're following the trend. And if it breaks that trend, we'll just cut our losses. So where am I looking to sell? Well, earlier today, I was talking to people on the Learn Plan Profit group. I'm looking to sell. First of all, I'm looking at the trend. I'm not looking to sell yet. Once it's around $28.58, this is a time to reevaluate. Okay? Why is that? Well, you guys can see that this has been a previous support. So this is possibly the new resistance, right? Right here. Around $28.50. $28.42. $28.40, around that area. Because you can see that this is where the second breakdown candle occurred. And then if it does go over that peak without much effort, then what are we going to look at? Well, we can look at this potential, $29.50, or even possibly $30. So the potential for profit is there, maybe around 8%. The potential for loss, if you got in here at this point, not too much, around 1.5%. Make your losses small. Make the potential for profit big. Okay? All right. So that's everything that I'm analyzing today. Oh, and one more thing. I just remember things at the last minute, right? One more thing on SPY is I want to show you guys, look at the volume today. Look how low the volume was today. Do we have significant buyers today? Not necessarily. So people are a little cautious, and this is why you should be cautious as well, right? We have low volume. We have a massive push up. Whenever that happens, we got to be careful. Look at a couple of these days, right? We had low volume and we had to push up. This was a higher volume, right? Just got to be careful because now we even have a lower volume than these days. So that's another reason why we should take profits as we continue going higher. So that's it for my review today. I will see you guys tomorrow for another market analysis. If you guys like this video, please like this video. If you didn't like it, I hope you like it in the future. I hope you guys learned something today from my mistakes and from the mistakes that I've actually continuously made being in TVIX, and I'm learning from my drip stance as well. So yeah, hope that provides more insight for you guys, and I will see you tomorrow. Later, guys.